Hey guys, Jason DeLong here with Heartland Homes KC. Just wanted to reach out today. I've had a lot of questions on hard money and private lending. So I wanted to jump on with Drew and kind of answer a few of those questions for everyone that has an interest. What's up, Drew?
Hey, I'm good. How are you?
Good, man.
Awesome, awesome. Well, as always, appreciate you having me on, and let's jump right into our topic of hard money and private lending today. All right.
You bet.
All right. So my first question is what is the difference between kind of that hard money that and what is hard money, and then what is the private lending, and kind of explain the differences of the two.
Yeah, you bet. So hard money and private lending, those are typically for investment type properties or just properties that are outside of the normal conventional guidelines. So we use it a lot when we do our flips and other investment properties. So they call it hard money, but it's actually a little bit easier typically because than conventional lending. You're more so evaluated on the property and how the numbers on that looks versus just your credit score and your all your bank statements and personal financial statement. Even though they do ask for those, but you're going to pay a little bit higher interest typically with those, and maybe some points on top of that. So the costs are a little bit more, but it's a little bit easier to get funded on certain projects by using hard money. So it's always good to have just when you're doing investment or just something that's outside the normal realms of conventional financing.
Perfect. Yeah, hard money definitely sounds like it's more of that investment side of things. So that is awesome to kind of use that as a way to potentially look to get into the investment space as far as real estate goes, and kind of use that to build that portfolio long term. So
Yeah.
definitely a good way there. So my next question for you, Jason, is how can hard money be broken down into the different types of hard money? Like what are the different ways that you can look to, I guess, use hard money,
Right.
and different types, and how can you format that to make it work for you?
Yeah. No, and I think the best way to explain kind of hard money, there's so many different types, and each one. So you have some that are a little bit less on the interest. So say typically for hard money lending, you're going to pay anywhere from 7 to 14%. Now, like let's take one that's say 12 to 14% on the higher side. Those you might have some points on too, which might be 1 or 2 points, which is typical just with any other loan that you might see out there. But those are usually a little bit easier and less hoops to jump through to get, and maybe even quicker to close on. Now, some of the other ones that like say 7% that are a little bit less on the interest, those you might even have to put 10% down on the whole project scope. And they're going to ask maybe for more paperwork and just take a little bit longer process to go through. So it kind of makes sense. It's like the more it costs you, the easier it is to get, and vice versa. So there's a wide range of them, and each one serves its own purpose. For I don't mind paying the higher interest if the numbers make sense, and we need to close quicker, and the project won't take as long. But if it's a higher price, like say a $500,000 project where you got higher numbers, then that interest, becomes more crucial, and it might not make sense. So each one kind of serves its own purpose.
Yeah, absolutely. I could definitely see how the different types of hard money there can definitely be beneficial for those different types, Jason. So awesome.
Yep.
My next question now dives into, I mean, touched a little bit on this of as far as what more so the investment side, right? Of looking to use the hard money, right, for your investments, flips, things of that nature. But what
Yep.
other situations are there where hard money is going to be more beneficial for you than, say, using more of the conventional private lending financing for your next property?
Sure. Sure. And we've even had people, if they want to buy a house that they're going to live in and it needs some work, go in and use hard money, and then say it needs $25,000 worth of rehab work. So they'll do hard money to get it up to where it needs to be, and then refi on that with a traditional loan. That's your standard interest rate, which is low right now. So it comes in handy for that, because some banks aren't set up to lend on something, especially if it's not going to pass inspection. If it needs work, they're not going to lend on it due to that. So you need to use the hard money to get it up to where it needs to be, up to standards, and then refi, or some of them are rolled over into an end loan. But yeah, that's one situation. There's a lot of people looking into the investment side right now, whether it's to buy rentals or they want to do their first flip. And I love helping people kind of get started. So on a rental, like I've got a couple clients right now that are buying a property that just needs a little paint and carpet. So using hard money to buy it, and then they're going to refi it into an end loan that has lower interest rates. So there's a lot of different reasons why you use that over a conventional.
Makes perfect sense to me, quite honestly, Jason, of why you would use that hard money and then look to turn it into the beneficial gain for you in those
Yeah.
circumstances. So awesome. Well, that's it for my questions today, Jason. As always, it was a pleasure being here and being able to bring to you the most common questions when it comes to hard money versus the private lending. Sorry about the sun coming through here in my
Yeah.
office, but
Hey, at least the sun's out, right?
hey, that is true. I'm glad that we are finally seeing some sunshine and some warmer temperatures here in the KC area. That is for sure. So, outside of that, Jason, though, I appreciate you as always having me on. And as always, that's it for today.
Yeah. Sounds good, buddy.
All right, perfect, Jason. We'll see you next time. And other than that, take care.
All right. You too.